All right, welcome everybody to this week's client support webinar. My name is Bennett McDowell, and today is November 1st, 2023. Hope everybody's doing well out there. All right, so Jean, any comments you need to share today?
Well, just welcome everybody, and want to make sure everybody knows about Stock Analysis Fridays on YouTube every Friday, 8 a.m. Pacific time. Join us on our YouTube channel, and I will post a link. Back to you.
Okay, thank you. All right, good turnout today. Welcome everybody. So let me go through some administrational items, and I'm going to jump into the content. I'm going to talk about the PTF today, which is our precision trend filter. I've gotten a lot of requests to go over that again, so I'm going to go over that today. But of course, if you have any questions, feel free to ask them, even if they're not related to the PTF. Again, this is a webinar for you guys, so feel free to ask away, but I am going to focus on the PTF. All right, so let me get going here. First thing we have to talk about are the risks involved in trading. Like I always say, without the risk, there is no opportunity. So the two really do go hand in hand. But you need to be aware of the risk and the fact that it is possible to lose some or all your money trading the financial markets. We can help you with risk control. It's absolutely imperative to have a form of risk control you use on a consistent basis because you're just not going to win every trade. We deal in a realm of probabilities. Also, too, past performance does not guarantee future performance. And please, if we share some stock opportunities or picks with you today or talk about our opinions on forecasts, run those by your financial advisor to make sure our ideas are suitable for you. We don't know your personal situation, and of course they do. So that's real important. Also, too, I have two good books on money management if you need help in that area. And my new book, The Art of Trading, second edition, is in the process of being published. I think that's going to be the best book I've ever written, and so you're going to definitely want to pick that up, and you can pre-order that. And the order link is on our website. All right, here's our software tools. Many of you have some or all of them. You know, you can always purchase them as a bundle and get them all, or purchase them a la carte. Okay, so it depends on your budget, your needs, and so forth, and what kind of trader you are. But we have risk control software, we have scanners and charting software as well. And you can learn more about that on our website too. Okay, so let me come out of here. I want to focus today on the actual PTF indicator. So if you have any questions on that, feel free to let me know. I have TradeStation running, but I also have NinjaTrader running as well, okay? So doesn't matter what platform you're using. All right, a little talk about the PTF. The PTF is normally what I have loaded as the second indicator here. So this is the PTF, and you can load it, you know, you can have the hierarchy any way you want. So I have the owl up here, but if you wanted to put the PTF on the top, you could do that too, okay? Maybe you haven't purchased the owl, you haven't purchased the Trendline Master or the ERI. And if that's the case, you're only going to have the PTF as one of our indicators loaded. But I usually put it just under the owl. That's just my personal preference, no particular reason why. But that's the way I have Mark set you up when you buy software from us. You know, he's our software installer. So I just tell him to do it like I have it, and then you guys can change it later on. All right, and that's what we're going to talk about, how that works, what it's all about. So in terms of how many people out there have the PTF and how many people has it helped? I'd be interested in knowing all of that. So let me know in the questions window as I'm talking about it, if you own it. And if you feel also if you have a fairly good comprehension on how it works and so forth. Okay, so that's something you can do for me on the questions window. All right, I'm going to bring up the whiteboard for a moment and talk a little bit about the PTF. So if the PTF sits at the bottom of your chart here, like this, okay, when prices are moving randomly, kind of like this, chances are the PTF is going to be a yellow color, okay, because nothing really is exciting happening. The PTF, what it does is it looks at momentum when it gets extreme, either to the upside or the downside. So if the market's meandering kind of like this, you're probably going to see a yellow PTF. Now, what does the yellow PTF mean? Anybody? What does that mean? Those of you that have been using it a while, what does the yellow PTF mean? Can you go long? Can you go short? Are you not supposed to trade when it's yellow? What does it mean? Anybody? And you can type your answer right in the questions window. Okay, it's neutral. Good. Very good, John. Excellent. Yeah, Frank's got that too. Neutral. What does neutral mean? Okay. What does neutral mean? No trend, right. Also too, it just, not necessarily, okay? Sometimes we have a yellow PTF when the market's trending, and then it may wait a little while before it indicates a trend in that direction. So we'll talk about that. I want you to think of the PTF as important with three main ways, and that's the colors. It's either yellow, red, or green. And when it's neutral, it has no reading at all. It's like if you had a trading buddy. Think of the PTF as your trading buddy. And you turn to your trading buddy and you ask them, do you think the market's going to make another high? And the trading buddy, because it's yellow, the PTF is going to say, I don't know. I'm getting a neutral reading right now. So at that particular point, it's not helping you. It doesn't know if it's going to go higher, make higher highs or lower lows. Okay. Now let's say it breaks out of this pattern. Okay, it starts to move up, but it's still yellow. Okay, let's say it pulls back a little bit and heads back up, and now it turns green. So this price bar turned it green, right? I'll make that a little more accurate in my drawing here. All right, so that price bar turned it green. So why didn't it go green here during the breakout? Why didn't it go green there? Well, the reason for that is that what it measures, what the PTF is looking at is momentum, and it just wasn't high enough at that point to trigger it. But it was high enough on this price bar. So you'll see either a green or red PTF being triggered when the prices have reached a level that the momentum is high enough that it triggers it either green or red. You know, if it's coming down, it's obviously going to be red. In this example I'm showing you here, it's green, right? So that's important. So that as soon as you see it green, you know whatever the highest price bar in that green area is, that there is a 75% probability, because that's the probability on a green or a red, that the market is going to continue higher, right? Now, let's say you wanted to trade this when it broke out, like go long on this price bar. Let's say you had a pyramid here, okay, and this was neutral. Let's say the owl was green here. So let's just say everything looked good for a breakout trade at this point. Could you take it? It's yellow. Sure. You can go long or short on a yellow PTF. You cannot go long if it was red. So if the PTF was red, you could not go long, but you can go long on a yellow. So then how does the PTF help us? All right. Well, one way it helps us on this initial long trade is it wasn't red, right? Okay, so that it being neutral is clearing the way for the trade to be taken either long or short. Okay, all right. However, when it turned green here, and that's important because what usually happens is when you get a green PTF, if prices continue to go up, all right, this may stay green or it may turn yellow depending if the momentum was strong enough on the price bars to keep it green, right? But let's say it pulls down and remains green. Now, if you don't understand how the PTF works, you'll send me an email that says the PTF's not working. I get that sometimes. And when I get that, it's just, I know I need to do a little more training on it because you don't understand really what it's telling you. So the PTF is an indicator that is telling you if it's green that more highs are coming, but it's not telling you when, and it's not telling you if you're going to have profit taking before it does. So you could have a green PTF during a move down during profit taking. But what this is helping you to understand that if you went long here and your stop is here, you shouldn't panic because as long as this is green, this is not a change in trend. This is just normal pullbacks, breathing in the market, and you should get a recovery and go high. And when it goes high again, if the momentum is strong enough, it will remain green. However, if on the next high, the momentum is lower, it will turn yellow again. Now, that doesn't mean necessarily you should exit the trade, but now it's gone back into a neutral stance. Now, in terms of trading, what you could do, if you went long here, let's say 10, 20 contracts, okay? When this turns yellow, this is a possible scaling out area or exiting the trade, depending on how you want to operate your rules, okay? So if you're profitable and this turns yellow, all right, well, that may mean that the trend is coming to an end or possibly getting ready for a more significant pullback. So you may want to scale out a little bit or not, okay? It depends. Depends on how you want to run your business. So the green to yellow or even red to yellow when that happens on a downtrend, all right, can signal a scaling out area. All right, so let's go back and erase some of this stuff. So that's one way the PTF can help you. All right, but let's go back here and take this out here. Okay, so the PTF now turned green here, and we're getting a pullback. And now, let's say we're starting to see some bullishness come back in. And if you have the owl, you may see the owl red for a little while here and then turn green. Well, if you didn't get in on the pyramid, or even if you did, okay, here's another opportunity to go long. Because you know there's a 75% probability we're going higher than here. So this could be a scalp trade. We call that a PTF high or a PTF scalp trade. So a couple of scenarios here. Let's say you went long with 20 contracts here, okay? And we've got a green, let me erase this because we don't have a yellow anymore. Okay, so we have a green PTF remaining here, okay? Then you may, at this particular point, if you moved your stop up here, you may want to add in some more contracts, put your stop here, and then not only have a trend trade, but have a scalp trade too. but structured. That's the key. All right, so that's an example of a bullish PTF, and then when it gets high here, it will, if it turns yellow, okay, then at that particular point you exit if you want. Now, if you're doing Elliott wave analysis and you're showing your target is way up here, then you may just want to do a scale out, that's all, and keep the rest of the market in. So you can use and combine these type of trading principles with other principles like the Elliott wave or fibs. So if you're expecting it to get to a fib extension target up here, right? Then obviously you don't want to just get out of the trade, but you may want to scale out here, okay? Or you certainly could add in here. So there's different ways in which you can use that. So I'm going to erase this for a minute now. So when you see a PTF, and here it is at the bottom, turn green, and you get a pullback, and then it goes back up and it turns yellow when it clears the high. Did it work? Does that mean it worked? Yeah, because it's telling you under the green that we have a 75% probability we're going to go above the top. And when we go above the top, if the momentum is not strong enough to keep it green, it will turn yellow. So that means it worked because you made another high and it said you would. Now, if by chance, let me just erase this for a second. If by chance it does not turn yellow, but remains green, that means the momentum was high again. And now the scale out point is new. So it's no longer here, even though this one originally turned it green. This now, let me draw this a little better here. This now, if it's green now, is the new PTF target. All right, and whatever the highest high in the price bar is, that's the PTF target, okay? So if it remains green the entire way, all right, it's the highest price bar in the green area, that becomes your target. Any questions on that? Vice versa for a red one. All right, now, let me erase that again. What happens if you have this? So you have the market moving up, PTF down here. Turns green here, market moves down, comes back up, takes off way down here, and all of a sudden it goes from green to red. Ooh, that's not good, is it? Okay, so you would have gotten stopped out on a scalp trade, but it abruptly turned from green to red. Well, that's the 25% time it doesn't work. So when it goes from a green to a red or a red to a green, it didn't work. When it goes from a green to a yellow or a red to a yellow, it works. It worked. And that works 75% of the time. So this would result in a losing trade. Okay. And you'd have to pivot and now put a bearish hat on because this is saying lower lows are coming, right? Frank, I think we had something like that in our day trading room yesterday when we were in the NG futures contract and we were short based off the PTF and it changed and we immediately had to shift hats and go long, right? All right, so that was, you know, it happens in the real world, okay? Any questions on that? Okay. Now, everybody looks at this and goes, oh, wow, that's great. 75% accuracy rate. How can you go wrong? Okay. So whenever I have a good pullback and I have a green PTF, I just go long. and I should have a 75% accuracy of the trade working out. Man, that's great, Ben, thanks. Okay, all right, well, not so fast. All right, so stop loss placement becomes extremely important. Extremely. So if I put my stop here, then, you know, I figure my trade size in the whole 9 yards. What happens if the market comes down here, stops me out, remains green, and then takes off? Well, the PTF is going to be right, but my trade's going to be a failure. Does that happen? Yeah. So stop loss placement becomes very important. Had you put your stop here, that would have been a better place, right? So maybe you had a pyramid here you should have used instead. Or maybe if you're looking at the Elliott wave, this was a 1 and we have a 2, and you know a 2 can be a wild card, right? So give it more room. So I always try to give a PTF trade as much room as I can in order to still get a decent trade size and make the trade work. And I have to have a 2-to-1 risk to reward, right? So in other words, if my stop's here and I'm in, you know, around here, then that distance to the PTF target's still got to be 2 times 1, right? So you still have to have the good risk to reward. Does that make sense? Same thing with the red one, just opposite direction. Kind of cool, huh? All right, let's look at a real life example here. Here I've got TLT. Now this was kind of an interesting situation. Here's a red PTF. Now, we had a bottom back here that created the red PTF. And if you didn't have the PTF signal, this could have been conceived as a major bottom, thus going long, right? Many people did. We didn't. And the reason for this is the red PTF. So the red PTF was basically calling for more lows, not more highs. And look what happened. So during this period, the emails started coming in, your PTF's wrong, your PTF's wrong, your PTF's wrong. Well, you know, sometimes it is, 25% of the time it is, but you know what, 75% of the time it's right. I always go with the higher probability. So I stayed out of the trade. And then look, and then when the pyramid showed up here red, you could have actually gone short, but that saved a trade, right? Okay, now they're turning yellow, so they're neutral, okay? So we're maybe getting close to a bottom. Now, if they're yellow, can they go to red again? Sure, that's what happened here, look, okay? So when you have a PTF that's either red or green, the idea is it gives you information. Information of a bottom could be in or not, or a top could be in or not. And if you're short and you have a red PTF, that gives you confidence that that short position has a higher probability of achieving what you want it to achieve, right? At least depending upon where the PTF target is. But here's a great example of looking for a bottom on TLT, which is the ETF for bonds, and using the PTF to help us with better clarity determine if we really are at a bottom. Okay. Now, Frank mentioned something interesting here. He said the PTF is, when it's yellow, is no trend. And that certainly is not necessarily wrong. But for example, if you have a bottoming market and a yellow PTF, well, then you're right, that's no trend. But my point is also too that you can get a trend coming up and it can be yellow until it reaches an extreme and turns it green. So that's why when I get in initially, as long as that PTF is yellow and I go long and I have a green owl and it breaks that support area, I can either wait for a pyramid at that point or go long and put my stop at the very bottom, as long as that PTF's not red, right? Okay. So we still got a bearish pyramid here, so we're not going to go long yet. We still got a red owl here. We got yellow. So if this remains yellow on all time frames here, and this turns around and I start getting bullish pyramids and a breakout above whatever support level occurred with significance on the way down, then guess what? That can be a long trade. And you could take that on a yellow PTF. And it could be the beginning of a new trend. You know, for example, also too, look at this. This whole move down here was a yellow PTF interrupted by one red one. So, you know, you can go long or short on yellow. You just don't want to go against it for sure. Okay. And when it does turn red or yellow, then that can help you make assessments on things like, you know, should I scale out? Should I not? Should I stay with it? Because sometimes, you know, if you get a situation like this where the market's moving way down, all right, then you may say, oh boy, I better take some profits. Well, you know, if it's yellow, all right, just keep that stop at the pyramid. But when it's red, don't worry about the pyramid so much. Keep it at certain pressure points where you can let the market unwind for some profit taking and still stay with the trend, right? See what I'm saying? So again, PTF is your buddy, all right? And when you turn to it, it's going to tell you one of three things: yellow, green, or red, all right? Other than that, that's tunnel vision. That's all I can tell you. Now, a couple more things I want to delve into in the last few minutes with this. You know, depending on the platform you're using, all right, notice that I have an upper band here and a lower band here, okay? So when the PTF breaks one of these band lines, that's when it turns, right? Okay. So it broke it here, so that means the price bar here was strong enough to drive it down and create the red. Likewise, as soon as it went below that price, it was not strong enough at that time and turned it yellow. Then a little bit later on, heavier selling pressure came in that turned it red again, and then it went lower low and turned it yellow. Okay, so that's why you can get these bands sometimes where it goes short period of red, long period of red, interrupted by yellow. Okay, that type of thing. Now, the other option, okay, the only really thing I care about when I look at the PTF is the colors. All right, and some people like to have the lines on there. I don't really look for divergence in the oscillating line in the PTF, you know. And when you talk about the PTF, let's say what I can say, I can get rid of the oscillator line, okay? So if I apply that, the line goes away, see? And then I'm stuck with just the yellow, red, or green if it pops up, see? That's the only thing I really care about. Now, a couple things, couple exceptions here that you need to be aware of, okay? So let me go put those lines back up. Okay, so I'm going to open up the PTF really wide. I don't know if I can find an example of this, but let me just look and see if I see anything. You know, I could spend 5 minutes and try to find a chart, but we don't have 5 minutes, so I'll explain it to you. All right, so let's take a look at the PTF down here with its lines, okay? So here you have your line here, right? This is your upper line. This is your lower line, okay? Let's do that. All right, then you have the squiggly line here, okay? So let's say it moves up here comes down here, and then moves up here again. And let's take a look at what the prices is doing. So if it moves up here, okay, and this price bar, let's say, triggers the PTF to turn green, right? So we got green here. All right, then it pulls back, still green. Okay, pulls back, meanders a little bit like this, and then all of a sudden takes off like that. Well, let me do that again. Hold on one second. All right, so it meanders a little bit like this, and then takes off like this. Oh, no, I don't want that. Takes off like that. All right, and then rolls over like this. Huh. All right, well, I got an above line here and an above line here. So I've got two price bars that triggered it, but this one's lower. This becomes the new high, okay? That becomes the new high in terms of the indicator. This is the secondary high. So if you're shooting for this high originally, you can still shoot for that, but you need to be aware that the PTF, if it goes back up here, will turn yellow if the momentum was not strong enough to keep it green, okay? You see what I mean? And the reason we do that is because some people show up here, and if this is this, then this is going to turn yellow here, so they need to be aware that this is the new scalping situation, okay? There's still a 75% probability on both those, but that one definitely supersedes it. Okay, any questions? I think TLT is a great example of that because it's just a really, really useful tool at times like that. And even when you're in a trade, or even, you know, sometimes we look at the market, we can't figure out a target based off the Elliott wave. So we can't really draw good fibs in, but there's a PTF target that makes sense. So sometimes we'll take that. And that's truly just a PTF scalp trade. All right, well, that's what I have for you today. So hopefully you found that helpful. Did you like that? Because I know I get quite a few questions on that PTF. So key thing to take away, if it's yellow, it's neutral, you can go long or short. If it's red, short only. If it's green, long only. Okay? So it's just like the traffic lights, right? Red, yellow, and green. But the only difference is you can't go through the traffic light when it's yellow, right? On this one, it can go long or short. It's a little different. All right, well, thank you, Frank. Appreciate that. All right, so, you know, we did record this, and the recording will be up once again in our private YouTube area. So definitely check that out if you need more help with this or need to review it. Alexander, you are welcome as well. Good turnout today. Thank you, everybody, for being here. I know everybody's busy, so I always try to cover something very helpful. And, you know, maybe next week I'll cover one of the other indicators. You guys can let me know if there's any interest on that. Maybe a good one we haven't covered in a while is the emotional reader index. Maybe we can go through that one. Okay. All right. So have a great rest of the week, and we will see you back here next week. Thanks so much, everybody. Gene, I'll turn it back over to you if you have anything left to say. Any other items?
Great session. I thought that was a super analysis of the PTF, so very, very helpful. All right, well, great to see everybody, and we will see you next week.